Hey everyone! So, if you're running a business here in New Zealand, you know that dealing with GST is just part of the game. But are you really sure you're claiming back every single dollar you're entitled to? In the next few minutes, we're going to make the whole process of claiming GST on your expenses feel way, way simpler.
Okay, let's be real. We've all been there, right? You buy a shiny new laptop for work, but, it also happens to be your go-to for streaming shows on the weekend. So, how do you handle the GST on something like that? It's probably one of the most common questions out there, and today we're going to get you a really clear answer.
All right, first things first, before we can talk about what you can claim, we got to look at the bigger picture. The easiest way to think about GST is like a constant balancing act between the money coming into your business and the money going out. To really get this right, you need to know two key terms. First, there's input tax. That's just the GST you pay on things you buy for your business. Think of it as money going out. Then there's output tax. That's the GST you charge your customers on your sales, the money you're collecting on behalf of the government. Getting the difference between these two is absolutely crucial.
And here is where it all comes together when you do your GST return. It's actually super simple. You just take all the output tax you've collected and subtract all the input tax you've paid. That final number, that's either what you owe the IRD or, and this is the fun part, what they're going to refund back to you. So now that we've got the basic formula down, what about claiming that input tax? What are the golden rules? Well, before you can claim even a single cent, there are a couple of non-negotiables you have to take off. And here they are, the two golden rules. Number one, the expense has to be for your taxable activity. That's just the official term for your actual business operations. And number two, you absolutely 100% must have the right records to prove it. No exceptions. So, what do we mean by correct records? Well, it really just boils down to three simple steps. First, you've got to get a tax invoice. The IRD's official name for this is Taxable Supply Information. Second, you keep a copy of it. Digital, physical, doesn't matter, just keep it. And third, and this is the really important one for mixed-use items, you've got to track how much you're actually using it for your business. And that brings us right to the heart of the whole thing, that tricky situation where something you bought isn't 100% for the business. This is the mixed-use dilemma, and it's where most people get a little bit stuck. And here's the rule, straight from the source. The key phrase here is to the extent. It's all about how much it's used for business. So if you use something for work only half the time, then guess what? You can generally only claim half the GST. Okay, but how in the world do you calculate that extent? The good news is, you don't have to pull a number out of thin air. The IRD actually gives you two different methods to choose from. Let's figure out which one is the right one for you. So here are your two paths. You've got the apportionment method and the principal purpose method. Now, I know they sound a bit technical and official, but trust me, the ideas behind them are really, really straightforward. Let's break them down. Let's start with the apportionment method. And honestly, it's pretty much exactly what it sounds like. You figure out a percentage of the item's use that's for business, and then you claim that same percentage of the GST. The key here, though, is that your estimate has to be fair and reasonable. Let's go back to that laptop example. You buy a new one, you have a good think about it, and you figure, yeah, it's for business about 80% of the time. Well, using the apportionment method, you just claim 80% of the GST you paid on it. See? It's really that simple.
Now, for smaller purchases, there's actually an even simpler way to go. It's called the principal purpose method. This one is less about doing math with percentages and more about making a simple all-or-nothing call. The very first thing you need to know is the price limit. This simpler method only works for goods or services that cost $10,000 or less, and that's excluding GST. If you buy something that costs more than that, you have to use the apportionment method we just talked about. Here's how it works. You ask yourself one simple question. What was the main reason I bought this? If the honest answer is for the business, then you get to claim the full 100% of the GST. All of it, even if you use it for personal stuff a little bit. But this is the other side of the coin, if the main reason you bought it was personal, even if you do use it for work sometimes, then you have to claim zero. Zilch. Nothing. It's a very clear-cut, all-or-nothing rule. So let's do a quick recap on that principal purpose method because it's super useful. Remember, it's for items under 10 grand. It's all based on the main purpose you bought it for. The claim is either 100% or zero,
And maybe most importantly, using it is your choice. You can always use the apportionment method instead if that works out better for you. All right, we are in the home stretch now. Let's just quickly touch on a couple of other common situations that you might bump into from time to time.
So, two quick special cases for you. First, importing goods. If customs slaps a GST charge on your items when they land in the country, you can claim that GST back in your return. Simple. Second, what happens if you buy something from a person or a tiny business that isn't registered for GST? Well, generally, there's no GST to claim. But there is an interesting little exception for some secondhand goods that might let you claim a credit anyway.
So, after all of that, what's the one big thing to remember? If you take away anything from this, let it be this. Keep good records. Be honest about tracking your business use, and then choose the method, either apportionment or principal purpose, that makes the most sense for each expense. And that really just leaves one final question for you. Think about your last few business purchases. Which method should you be using for them? And more importantly, are your records ready to go to back up that claim? Thanks for joining me.